To quote Adrian Cronauer in Good Morning Vietnam, it's hot, damn hot, real hot. And I'm not just talking about the temperature out there, I'm also talking about the fact that this is DCA Wednesday, stack number 104. That is 2 years worth of Wednesdays. Are you ready to grow that stack, you sexy sat stackers?
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. Today is Wednesday, July 19th, 2023, and that means it is DCA Wednesday. It also means that it is going to be DCA Wednesday stack number 104. There are 52 Wednesdays in a year. 52 times 2 years is 104. That means we have stacked for 2 years now, even though technically it's a couple more days until the official 2-year anniversary of the very first Bitcoin Bulletin Podcast. As I mentioned in the lead-in, one of my favorite movies from the 1980s was Good Morning Vietnam. The movie about Adrian Cronauer, the DJ portrayed by Robin Williams, the military radio disc jockey during the Vietnam conflict. And one of the funny lines in there is when Robin Williams is ad-libbing as Adrian Cronauer, and he's interviewing himself as Roosevelt T. Roosevelt, asking about the weather. And Roosevelt T. Roosevelt replies, "It's hot, damn hot, real hot. Hottest thing is my shorts. I could cook things in it. A little crotch pot cooking. Well, tell me what it feels like. Fool, it's hot. I told you again. Were you born in the sun? It's damn hot." And that is what it feels like all across the United States right now, all across the world, if you believe what you see on Twitter with the forecasts in Europe and, well, not all across the world. Obviously, the southern half of the world, the southern hemisphere of the world is experiencing winter. So if you're listening from Australia or somewhere south of the equator and you're freezing right now because you're in the middle of winter, just know that the hype in the northern hemisphere is that the world is melting. Before we get into all that real quick, let's take a look at the vital statistics. As I mentioned, it is Wednesday, July 19th, 2023, and at the time of this recording, Bitcoin is at a block height of 799,453, and Bitcoin took a little bit of a dip. It's on sale just a tiny bit at ringing in at a US dollar value of $29,885 per Bitcoin, or a rate of 3,346 sats per dollar. Of course, I've mentioned this repeatedly, episode after episode for months now, that if you follow Adam Meister at TechBalt on Twitter, he talks about his 210,000 block theory. That's basically the 4-year cycle theory, and that says that we're essentially repeating 2019 at this stage of the halving cycle. And as I mentioned repeatedly, at this stage in the halving cycle, we were playing deja vu with 9,000 over and over again. And there were those famous "it's over 9,000" Vegeta memes. How many times did we see those memes? Because we went over 9,000 and under 9,000 and over 9,000 so many times. And I'm just getting that same feeling with 30,000, which, of course, as I've said, seems to be this cycle's magic number during the accumulation phase. I've mentioned that quote from the movie The Right Stuff, or the book The Right Stuff, multiple times, that the public likes a nice round number. And there's something about human psychology. There's not necessarily any fundamental reason why Bitcoin would hang up at 30,000 other than the fact it's a magic number. Psychologically speaking, it's just a nice round number. Mentally, it's just appealing to people, and human psychology, like I said, it likes nice round numbers. So 30,000 seems to be this accumulation phase. This accumulation phase's nice round number. Of course, we shall see. Nobody has a crystal ball, and I don't make price predictions, despite the fact that we talk about the price every week. At least when we're doing our DCA Wednesday stack, obviously the price is a big component of that. Speaking of this cycle, TikTok next block, we are currently 40,545 blocks away from the next miner reward halving. As you know, the reward that miners get for finding the next block is reduced by half every 210,000 blocks, and the next halving is set to occur it's programmed to occur at block 840,000, which is now looking like it's going to take place on April 19th, 2024. That's moved up yet another day. We'd been looking at that forecast of April 20th for the last couple weeks. It had been bouncing back and forth between April 20th and April 21st for literally at least 2 months. More than that, probably, if I go back through my show notes. However, there's really no way to tell. That's basically entirely based on how fast blocks come in between now and block 840,000. Usually, blocks are coming in faster than the 10 minutes they're programmed to come into, and that's because the network's growing. Network is adding hash power, newer miners are being released. The latest Bitcoin ant miners, the latest Bitmain ant miners are starting to come online, the 150 terahash range ASICs. I was listening to a podcast that was interviewing, I believe it was the nuclear Bitcoin miner, TeraWolf. They've got a huge commercial Bitcoin mining facility in upstate New York, I believe it is, where they're drawing power directly from a nuclear power plant. And they mentioned they've got several thousand of the latest generation ant miners coming. So, just that alone will increase the hash rate. And that means that blocks are going to tend to be found faster than that 10-minute average, which is why we have the difficulty adjustment. And I digress. Because of that, it's usually faster than 4 years that those halvings have been occurring. And currently that's looking like that will take place on April 19th, 2024. Back to the vital statistics. At this moment, Bitcoin has a market capitalization of $580.8 billion, roughly about half of its market cap that it had when we set that all-time high of $69,000 per US dollar per Bitcoin. At the peak of the euphoric phase after the 2020 halving in the fall of 2021. And for those of you who value your wealth in gold, it's currently going to cost you 15.4 ounces of shiny yellow rocks of little metal Peter Schiff pucks to purchase just one Bitcoin. That's almost an entire pound of gold to buy just one Bitcoin. And as you know, everything trends to zero in Bitcoin terms. So right now you can still purchase one Bitcoin for just a little under a pound of gold. Of course, you get the price of Bitcoin at the price, you get Bitcoin at the price that you deserve. And the longer you wait, the more gold is going to cost you to finally ape into Bitcoin. If you eventually fall down the rabbit hole and decide, they realize that Bitcoin is basically the modern equivalent of gold, that it's electronic gold, that it's everything gold is as far as a hard sound money goes and better. And right now, if you made that realization, you're going to have to trade 15.4 1-ounce gold coins for just one Bitcoin. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 1,671 large pepperoni pizzas from Papa John's. That is one pizza a day for more than 4.5 years. A lot of food security, a lot of pizza for just one Bitcoin. A heck of a lot more pizza than Laszlo got for his, a heck of a lot cheaper than Laszlo when he purchased his 2 pepperoni pizzas from Papa John's for 10,000 Bitcoin. All those years ago in that very first Bitcoin pizza day. Okay, it's looking like the mempool is clogging back up a little bit. We had seen the mempool clear out or start trending towards clear in the last couple weeks, and then it bumped back up and started filling back up a little bit. And right now it's looking like there are about 43 blocks, worth of transactions tying up the mempool. Again, a lot of that are those really tiny transactions, the ordinal inscription enabled transactions, not necessarily on-chain Bitcoin transactions. They're all on-chain Bitcoin transactions, but not necessarily Bitcoiners moving Bitcoin, people writing crap to the Bitcoin blockchain. Fortunately, those are very small transactions, so a lot of them can fit in a block, and they don't seem to be interfering with on-chain activity a whole lot. In fact, the fee estimator I'm looking at says that to guarantee your on-chain transaction is included in the next block is only going to cost you a fee of 14 sats per fee byte, down from 20 sats per fee byte last DCA Wednesday, and significantly down from, it was over 100 sats per fee byte a couple of months ago at the peak of the ordinals and inscriptions hysteria. The same fee estimator, Clark Moody's dashboard, is estimating that a fee of 5 sats per fee byte will be mined within a day. However, here's the change. It's also saying it's going to take a minimum fee of 5 sats per vbyte to get mined, period. That if you want to be mined within a week, that's the minimum fee you should include. Mempool.space, as usual, is telling a slightly different story. they're showing that if you have a high priority transaction, you need to get mined right away. Not necessarily the next block, but what they call a high priority transaction. You should include a fee of 6 sats per VByte, and that's only 25 cents at the current US dollar value of Bitcoin. So still really relatively cheap considering there are so many blocks with the transactions and the mempools out there. 25 cents to be able to move billions anywhere in the world without permission, uncensorably. That's pretty darn cheap. Still cheaper than half the price of putting a stamp on an envelope and mailing a check. Way cheaper than a wire transfer or a Western Union MoneyGram. So that statistic that I like to follow, my favorite statistic, at least it was my favorite statistic for the longest time, Bitcoin's 24-hour transaction volume, the on-chain transaction average, is up a tiny bit from last week. Currently, we're looking at an average of 5.67 transactions per second. We were at 5.17 last week, so coming a little faster. That had been trending down as well. A couple weeks ago, it was under 4 transactions per second. I think we saw 3.4 transactions per second on one of the weekend updates and 3.79 transactions per second on the DCA Wednesday episode on the Wednesday before that. And of course, that's because all those little tiny ordinals and inscriptions transactions are getting processed. Obviously, you can fit a lot more transactions if they're a lot smaller. If all they're doing is tying up the witness portion of the block, that they get more fit. All right, we were about halfway between Bitcoin mining difficulty adjustments. We had a substantial increase in difficulty just before last week's DCA Wednesday show. The difficulty it took to mine the next block went up 6.4%. As you know, Bitcoin adjusts the difficulty it takes to find the next block every 2016 blocks, which is theoretically every 2 weeks, with the goal of keeping blocks coming in at an average time of 10 minutes between blocks. When they come in faster than that, the difficulty increases, makes it harder to find the next block, hopefully slowing that down to that 10-minute average. If blocks are coming in a lot faster, did I just say that backwards? If blocks are coming in slower, difficulty decreases. To speed block speed up makes it easier. If blocks are coming in faster, difficulty increases, makes it harder to find a block to slow it down. Either way, the goal here is we're trying to make sure that blocks come in at an average time of 10 minutes between blocks. That doesn't mean that every block is going to take 10 minutes. Obviously, we've seen blocks take over an hour, or sometimes 2 or 3 blocks come in within a few seconds of each other. That is why Satoshi set that as an average of 2016 blocks. So, the more data sets, the larger data set you have, the more likely your average is to be accurate. It's kind of like flipping a coin, as I've said before. If you flip a coin 4 times, you might get heads 4 times in a row, but that doesn't mean that statistically you shouldn't get half heads, half tails every time you flip a coin. If you flip that coin 2,000 times, you'd probably end up with more like 1,000 heads, 1,000 tails, and thus it is with Bitcoin mining difficulty. Currently, we're looking at a decrease, a mining difficulty decrease in about 6 days, probably about July 25th, it's about 6.5 days from now, 897 blocks from now, and that's going to be a decrease of anywhere from 1.1 to 1.9%, depending on where you're getting your data. Last week, as you remember, we were a lot closer. We had just had a difficulty adjustment, so that estimate was nowhere near as accurate, and it was saying that we were going to have a mining difficulty decrease of 4.2%. Obviously, as we've gotten closer to the difficulty adjustment, that data has gotten more reasonable, more trustworthy, and therefore it's going to be a slight decrease of 1.1 to 1.9%, depending on what happens in the next 6 days. And that is because blocks are currently averaging 10 minutes and 7 seconds, obviously a little slower than Satoshi Nakamoto intended when he wrote the Bitcoin Core Protocol, but not as slow as last Wednesday when they were averaging 10 minutes and 26 seconds. So hence the decrease in the mining difficulty decrease. Real quick, thank you to those of you listening on your favorite Podcasting 2.0 apps, such as the Fountain app. Of course, there are other apps that you can listen to and help support your favorite podcast through the value for value model. For example, we have a boost this week from Leggy. Leggy boosted us 5,000 sats, and this was appended to episode 115, which I believe he had previously boosted with no message. I was questioning last episode whether that was my mistake, whether I just couldn't find the boost. And we got that answered because Leggy says, I don't give a FUD anymore. I'm only sorry for those who don't get it. Last week, there was no text with the boost. I'm listening while driving, so texting is bad. That it is, Leggy. Thank you for clarifying that because I really was curious. I was paranoid that maybe I had not that I was doing something wrong, that I had been unable to find your message. So cool to know. Thank you. I will not worry about that in the future if I see a boost come in with no text. And speaking of our listeners, our geographic distributional listeners is almost verbatim what it was last week, almost identical. The percentages have changed a little bit. The United States listenership moved up by 1%, but the order of listener, the ranking of countries, the order of listener by country has not changed. The most popular location for listeners is still the United States of America, where 54% of you are listening. But number 2 remains Argentina. So muchas gracias, amigos, in Argentina, the third most popular country, as far as our listening audience is concerned, remains Germany. So Dankeschön, mein Freunde in Deutschland. Number 4 remains Luxembourg. So once again, Dankeschön, mein Freunde in Luxembourg, or Morien, as they say in Luxembourgish. At number 5 remains Canada. So hello to our friends in the Great White North, in America's attic, that 51st state that we like to jokingly refer to our friends up north as. I believe it's Greg Foss that refers to Canada as America's attic. And number 6 remains Spain, so muchas gracias, amigos, in España. Number 7 remains Venezuela, so muchas gracias, amigos, in Venezuela. Number 8 remains Colombia, muchas gracias, amigos, in Colombia. Number 10 remains Singapore, and I still don't know how to say thank you or hello to my friends that are listening in Singapore. If you are listening in Singapore, you don't need to send that information as a boost, but you can send it as a boost, much like Leggy did when he told us how to say hello in Luxembourgish. But you can also send me a DM on Twitter at BTC Bulletin Pod, or send me an email at bitcoinbulletin@protonmail.com, because I want to know how to say it. I can look it up on Google Translate or online, but oftentimes that isn't necessarily correct. It might be technically correct, but it doesn't take into account slang or cultural differences in regionally or geographically. So let me know what you think. If you're the person listening from Singapore, if you're listening from Singapore, let me know how you say hello and thank you. But in the meantime, hello everyone in Singapore, and thank you for listening. And no change at all, even in the number 11 spot down there, is still Mexico. Really flattering that so many of you are listening from Central and South America, from Spanish-speaking countries, or even in Europe. Like Spain isn't neither Central nor South America, but still a Spanish-speaking country. A large percentage of our listeners speak Spanish, apparently, or at least are from countries where Spanish is the most predominant language. So, and that's kind of cool. I need to brush up on my Spanish a little bit. All right, so the news out there. As I led into, we're sitting at that. We're a little bit below 30,000 right now, but we're still sitting in that 30,000 range where we have been for weeks, for months actually. As I said repeatedly, $30,000 seems to be that magic number. That seems to be the new 9,000 without the Vegeta memes. I mean, how many times have we crossed 30,000 so far? I said just last week? I said if history repeats, we're going to do it at least 2 more times. And as long as Bitcoin goes back up, that's a done deal now, because we crossed it on the way down. Now we just have to cross it on the way back up. And along those lines, people are already starting to FUD the price of Bitcoin a little bit. There's a article in Cointelegraph just an hour or so ago that's entitled 3 Reasons Why Bitcoin Traders Anticipate BTC Price to Briefly Sweep the 27,500 level. And that's possible. Again, if you look at 2019, 9,000 seemed to be that magic number, but we dropped significantly below that. It didn't just hover at 9,000. It dropped significantly below, closer to that $3,000 level before popping back up above 9,000 at roughly about this point in 2019. So anything is possible. The one thing that's for sure, though, is if it does drop to 27,500 or lower, I'm going to be buying the freaking dip, because just because history tends to repeat, or at least rhyme, doesn't mean we're guaranteed to keep stacking cheap sats. Anything could happen. One of the things that is in the forefront of the news is, the ETFs that are pending approval with the SEC. If they get approved, or if any number of things happen, another country comes down and announces they're accumulating Bitcoin, who knows? Like I said, I don't have a crystal ball. There are any number of things that could happen that could cut this accumulation phase short. And so don't take it for granted that you get to stack cheap sats. But if we do, then I'm just going to keep loading up. So um, regardless of what happens to the price, when Bitcoin does set the next new all-time high, I know I'm still going to feel like I don't have enough sats. So I'm certainly not going to feel sad if the price of Bitcoin does trend down, but I'm not going to count on it. I'm going to keep stacking. And that's one of the beautiful things about dollar cost averaging, doing this DCA Wednesday, is that we're going to stack sats no matter what. And hopefully the price will stay down so we can get more Satoshis for those dirty fiat dollars. But either way, we're going to stack and we're going to get Bitcoin at the price that we deserve. Mastermind on Twitter posted yesterday an interesting insight on his price theory, and that was Max Pain would be a slow bleed for 6 months. Well, that jives precisely with what I've been saying about repeating 2019. If Adam Meister's 210,000 block theory holds, if the 4-year cycle theory holds, if we're really repeating 2019, well, we're not going to see a new all-time high for more than 6 months. We don't set a new all-time high till 6 to 18 months after the halving. So in theory, we should go more or less sideways until after the halving, until after April of 2024, more likely into the fall of 2024, maybe October, November, December timeframe is when we might see a first new all-time high, not the ultimate new all-time high, but when we break that 69,000 during the last halving, we didn't break that 20,000 all-time high until December of 2021. And so I'm sorry, till December of 2020. And that was 6 months after the halving. So that also wasn't the all-time high. We had the double top where we went 66,000 in April and then 69,000 again in the fall. So almost a year after we broke, it was almost a year of bull run after we broke the previous all-time high before where we had that blow off top and started the next bear market. And speaking of halving cycles, Ecoinometrics posts a chart that depicts the where we stand as far as comparing the 3 halving cycles thus far, and that clearly paints the same picture. Obviously, we didn't achieve as high of a high percentage-wise as we did. Maybe that goes along with the theory of diminishing returns. Maybe it was just because of the FUD that kind of nipped the bull run in the middle and gave us a double top instead of a one big blow off top. Who knows? But either way, if you look at the trend line of where we are currently in this leading up to this next halving, it is following a curvature that mirrors, pretty much what 2019 did fairly closely. And if that continues, then that just adds more credence to that. It will be interesting to see if we are experiencing diminishing returns, or if every cycle is just a little different. And really, we only had 2 previous cycles, so that chart does show a data range between the first halving cycle and the second halving cycle. But really, a graph with only 2 data points isn't super accurate. So maybe next halving cycle, that chart will be a little more will give us a little more insight as to whether we're experiencing diminishing returns or whether this was just a case of each halving cycle is slightly different. Speaking of the upcoming halving cycle and history repeating itself, every halving we get deluged with minor death spiral FUD. If this is your first cycle, brace yourself, because literally every previous halving, all the haters come out and say, this is it, Bitcoin's dead. What's going to happen is the halving's going to occur. The amount of Bitcoin the miners are getting is going to be cut in half. The miners are going to go bankrupt. They won't be able to pay their bills anymore. They're going to start shutting off. As they start shutting off, it's going to take longer and longer for the next block to be mined, and that's going to lead more miners to shutting off, and they get the death spiral, and Bitcoin never has the next halving, and it freezes up and dies, and that's it for Bitcoin. Obviously, it's a load of malarkey, as Joe Biden likes to say. It has never happened. There are a variety of reasons for why it never happens. Most probably, in my humble opinion, is because, well, first of all, miners are not mining. Commercial miners are mining Bitcoin a heck of a lot cheaper than what the current price for Bitcoin is. I think it was also that podcast interviewing Tara Wolf where they mentioned something along the lines of their average cost to mine a Bitcoin is basically like $9,000. So if Bitcoin's selling for $20,000 and the reward got cut in half, they would still be getting $10,000, which is still more than 9,000. So you can see why why there's still room for some profit margin in there. But more importantly, shortly after the halving, we see the new all-time high. So when the last halving happened, Bitcoin was about, what was it? I don't, it was somewhere around the $10,000 range. Maybe it was as high as 16. I don't remember. We're just going to use the number 10. And so if you were making, let's just say you were making $10,000 worth of Bitcoin, and you were making one Bitcoin, and that was $10,000, and the halving happened, and now all of a sudden you're only making half a Bitcoin, so you're only making $5,000. Well, shortly thereafter, the price of Bitcoin went up to $69,000. Let's round that down to $60,000. That's still 30. Divide 30 by 2. I'm 60,000. That's still 60. Divide 60 by 2 is $30,000. 30,000 is still triple 10. So the miner profit still went through the roof as a result of the 4-year halving cycle. So there are numerous reasons why the miner's death spiral FUD is bullshit. But the one thing you can count on, just like you can count on the 4-year halving cycles rhyming, is that the death spiral FUD will be coming hot and heavy. They're going to have a lot of the weak-handed newbies convinced, or at least very worried, that Bitcoin's going to die. They're going to try and shake that Bitcoin out of you with fear because, BlackRock and the institutions are going to need to buy your Bitcoin, and they're going to have to convince you to sell it somehow. And we're seeing that already begin. This is the first miner death spiral FUD of the news cycle that I've seen, with MSN.com running the article, "Next Bitcoin halving event could be a stress test for miners, JP Morgan." So JP Morgan is saying that the next halving will see a reduction in miners' revenue and an increase in Bitcoin production costs at the same time. Oh no! What are we going to do? I guess Bitcoin's going to die. The halving isn't going to kick off another bull run, and it's just going to, it's going to be the end of the world. And commercial miners are so stupid. They don't know any of this, right? They don't study history. They don't realize what happened in the previous halving cycles. They're not taking any of that into account. I digress, and obviously I'm being sarcastic. But prepare yourself, because the miner death spiral FUD is coming. This is just a preview. As we get closer to the halving, it's going to be the number one thing you hear about over and over again from the mainstream media. Mark my words. And it's happened every time, guys. There's miner death spiral FUD. Well, they trot this out even when it doesn't have anything to do with the halving. But every halving they say this. It doesn't happen. It's never happened. I wouldn't worry about it. But I would look back and say, if you do start to get weak hands, you do start to see all these articles coming out that hey, I told you this was going to happen, right? So when it comes true, you can take some solace knowing that not only is history repeating itself, you knew it was coming. See, last week was the anniversary of Bitcoin Sign Guy Day. That was pretty funny. That was the 6-year anniversary of when Christian Langalis held up the Buy Bitcoin sign behind then Federal Reserve Chairman Janet Yellen. The rest is history. We already spoke about that. I led into the show with a quote from Good Morning Vietnam. That was the movie about Adrian Cronauer, the radio DJ, the military radio DJ in Vietnam that did so much to boost troop morale over there in a war that already had pretty bad troop morale to begin with. That quote was when he's interviewing himself, Roosevelt. The quote, "It's hot, damn hot, real hot. Hottest thing is my shorts. I can cook things in it. A little like crotch pot cooking. Well, tell me what it feels like. Fool, it's hot. I told you again. Were you born in the sun? It's damn hot. It's so damn hot. I saw little guys, their orange rose burst into flames. It's that hot." And that is what the non-Bitcoin normie news is about. Yeah, it's hot. If you're in the northern hemisphere, it's summer, and you know what? It is hot. In fact, it was hotter than usual here in sunny Central Florida last week. Not hotter than it's ever been, mind you, but the stories were doomsday. Global warming. It was hotter than normal, hotter earlier than normal. As a result, the ocean's hotter than normal, and we're all going to die because we should have had massive hurricanes by now already, because hotter water equals more hurricanes. Oh, and the coral's going to die because it can't handle the hot water. Hey guys, I'm a scuba diver. I know what the water feels like when I jump off the boat. It's hot at the top 6 inches. And then even though it's hot and you're dying, I'm still wearing a wetsuit, because by the time I get down to the reef, it's actually kind of chilly. 75 degrees might not seem chilly to you, but water is more dense than air. It has more thermal mass than air. It drains your heat more efficiently than air does. So 75-degree day is gorgeous. Lounge around in the sun. 75-degree water is chilly after an hour or so. And it's always the same temperature on the reef, regardless of what the temperature is like when you jump through that water. The surface water is called surface water for a reason. It doesn't mix. They've got these things called thermoclines, and it's like a wall in the water. You can literally stick your hand through the thermocline. You can descend through the hot water into the cold water, and be shivering, and then you can reach your hand up 6 inches into the hot water and swish around in the hot water, and then take your hand back down in the cold water. Um, anyway, I just want to point out this is not the hottest summer that I've lived through. I actually lived in Phoenix, Arizona in 1990 when Phoenix set the all-time hottest temperature. It was 122 degrees. It's the hottest it's ever been in Phoenix. If you listen to the news, Phoenix was going to smash that record because it was 118 degrees. 118 degrees and 122 are huge differences. Upper 110s in Phoenix is not unusual at all. In fact, the day before it was 122. Well, 2 days it was 120. The next day it was 121. The difference between 121 and 122 was palpable. It's a lot like an airplane. You can get an airplane to go a certain speed with a certain amount of horsepower, but to get it to go a little bit faster doesn't take just a little more thrust or a little more horsepower. It takes exponentially more. And the faster you go, the more exponentially more thrust it takes to achieve that extra speed. To heat the Earth up that extra degree, it takes a lot. So 118 to 122 is a huge difference. That's not just 4 degrees difference. It's a gigantic difference. For those of you who want to know, the hottest temperature ever recorded in the United States was actually recorded in 1913. What is that, 110 years ago? So definitely doesn't jive with the whole global warming narrative for you in Europe or other countries other than America, where you don't use Fahrenheit. That was 56.7 Celsius. Really hot and really a long time ago. So yeah, it's hot right now, but it's also summer. And it seems like the media likes their FUD, and so every time it's hot, immediately, I mean, I'm sure they have these studies prepped. They're waiting for a high, and every time there's a high temperature, out comes the global warming. Out comes the global warming narrative. Most importantly, the man-made global warming narrative, because nobody disputes the fact the climate is gradually warming. In fact, one thing a lot of normies don't know is what the definition of an ice age is. If you ask a normie, and we're getting way off the subject of Bitcoin, but it has to do with FUD, which is tied into Bitcoin. The average normie thinks if you want what an ice age is, that's when the entire Earth was covered in ice and there were woolly mammoths and saber-toothed tigers and cavemen, walking around freezing, right? The actual definition of an ice age is any time that there's ice permanently present on the poles of a planet. It is not the normal state of Earth to have a polar ice cap at the North Pole and the South Pole. Back in the dinosaur days, the poles were lush tropical swamps. The fact that we have our glaciers receding or pack ice allegedly receding, because there's more pack ice last winter than there has been for a long time, but despite the fact that we've had it receding, we're still in ice age. This is not the normal state of Earth. If you look at geologic time, Earth usually doesn't have ice present year round. So the fact that it's disappearing, it's been doing that well before there were, the dinosaurs weren't driving SUVs, and before that, the single-celled organisms weren't driving SUVs. I'm getting way sidetracked here. Let's get back to Bitcoin. And the biggest news probably in the last 2 days, at least on Bitcoin Twitter, is RFK Jr. Robert F. Kennedy Jr., of course, is running for the Democratic nomination for president, and he's obviously a pro-Bitcoiner. I'm old enough to remember RFK from the 90s. I know a lot of things that he's said in the past do not jive with what I believe. I know that he is a big-time anti-Second Amendment person. He's very pro-gun control. He hasn't said anything about gun control because he's a very smart politician. The only things he's referenced are the school shootings, where he said the problem with the school shootings wasn't the guns, it was the prescription medication these kids are on. And that may very well be the case, but it's also an artful dodge because he also believes you should not have the right to have a gun. So I digress. A lot of people are very excited about RFK Jr. I love his position on Bitcoin. I love his position on freedom. I love his position on freedom of speech. I hate his position on the Second Amendment. So maybe if he gets the nomination, more of his views about things other than Bitcoin will come out and help you make your decision. But when it comes to Bitcoin, he's probably the best candidate we've ever had for president of the United States when it comes to Bitcoin. And the headline in Bitcoin Magazine was RFK Jr. announces bold plan to back dollar with Bitcoin and Bitcoin taxes. Speaking at the Heal to Divide PAC event, Democratic presidential candidate Robert F. Kennedy Jr. outlined specific Bitcoin-focused policies that he would enact as president, including gradually backing the US dollar with Bitcoin and making Bitcoin profits exempt from capital gains taxes. That is huge. That is awesome. That is really good to see. That would be great for Bitcoin. It would be great for the United States. It'd be great for the US dollar. Contrast this with how the European Union and the European Central Bank is heading full steam ahead into their digital euro. In fact, if you've been listening to other podcasts, you know that the Christine Lagarde quote where she said the digital euro will be the only form of digital payment accepted in the EU is out there. She said a lot of really stupid things about the digital euro, maybe just a lot of honest things. I mean, she's just telling you how it is, and maybe you have to respect that. But remember, it was Christine Lagarde that said she wants to ban Bitcoin because she called Bitcoin an escape hatch. I mean, that's what Bitcoin is, right? You expect governments to be oppressive. You expect them to push for more control. Central bank digital currencies are exactly that tool. And if there is a CBDC and you have access to Bitcoin, that is your escape hatch. She nailed it. She nailed it in that regard. So maybe she's just blunt and honest, or maybe her English isn't that good that she realized she's showing her hand. But she said that she wants to restrict you to only using the digital euro, basically. That will be your only form of digital payment accepted in the EU. That should be pretty ominously foreshadowing how are they going to achieve that, right? Are they just going to tell you it's the only digital payment and hope you follow, their advice? No. Authoritarians are going to authoritate, right? They're going to pass laws. They're going to pass rules. Obviously, they have more up their sleeve to ban you from using any other digital payment if they really intend to make the digital euro the only form of digital payment accepted in the EU. Lagarde's words, not mine. Of course, here in the United States, especially here in Florida, we have plenty of rebellion to the CBDC, obviously referring to what RFK Jr. said. He promises to do his first day in president, basically, to if he's elected, to halt the CBDC in its tracks, to do everything in his power to prevent the government from issuing a CBDC. Here in Florida, Florida Governor Ron DeSantis, as you remember, already passed a bill outlawing central bank digital currencies in the state of Florida. There's a headline in MSN just a couple of days ago where it says, Ron DeSantis, we will nix central bank digital currencies. Florida Governor Ron DeSantis has vociferously rallied against central bank digital currencies, parentheses CBDC, during an Iowa event. The federal government has no authority to unilaterally establish a central bank currency. That sounds, the article goes on to say Cruz said. So I think they're mashing two quotes up there. But the long and the short of it is, as you know, Ron DeSantis in the Florida legislature here has already passed a ban on central bank digital currencies. And hopefully, if we do end up with RFK Jr. as president of the United States, he's on board with that as well. Where was I? I got distracted by this Ron DeSantis quote because they went right into a Ted Cruz quote. I know Ted Cruz is very unpopular with a large percentage of the Bitcoin community, with the community in general. I mean, he's a very, very dividing, polarizing figure. People either love Ted Cruz or they think he's the Zodiac killer. But he is, at least he knows about Bitcoin to say exactly the right things. If you listen to what he says and you take him at face value, he's also solidly in the pro-Bitcoin camp. And even if he's only using it for even if you hate Ted Cruz and you think he's only saying these sort of things for political gain, well, as long as he's saying them, right? Who cares what his incentive is? If he's going to be a senator and he's going to represent the United States in the Senate, then best to have someone saying that on the floor of the Senate, even if he doesn't believe it. So at least he's saying it. If he stands for it, well, that's a good thing. And speaking of, okay, I don't want this to be a FUD episode because as Leggy said, I don't give a FUD. But there was an interesting quote from another polarizing figure on Twitter, Joey Manario. He has a podcast, a show that it's very popular, but he's also extraordinarily controversial, extraordinarily conservative, extraordinarily right-wing. But he had a post, I guess it's 2 days ago now, that he said, I say this with sadness, but it's true. American conservatives who are vocal should come up with an exit plan from this country should Biden, quote-unquote, win re-election in 2024. I firmly believe freedom will no longer exist in this country, nor will safety for conservatives. Biden made clear his intention to eliminate our ideology as best he could in that dark speech at Independence Hall. I think a second term would see that plan put into effect. We would see mass debanking, deplatforming, and possibly worse. You know where I'm going with it. So I'm bringing this up not because of the FUD. I'm trying to keep this episode more upbeat. I'm bringing this up because this is what Bitcoin is. Bitcoin is that plan B. We already see debanking. We already see deplatforming. We've seen it before now. That's nothing new. You know, even in England, people are talking about Nigel Farage being debanked, another polarizing figure. There's so many people who are good with Nigel Farage being debanked because they hate him. And that's the dangerous thing, because, you know, it's that first they came for Farage and I didn't care because I hated Farage. Then they came for so-and-so and I didn't care because I hated so-and-so. Then they came for me and there was no one left to stand up for me, right? If you're principled, you should want to protect the rights of even those you disagree with, especially those you disagree with, because freedom of speech, freedom in general, is most important when it's something you disagree with, or more importantly, when it's something the government disagrees with. You don't need to have freedom of speech to say, I love the government and the government is great. You need freedom of speech to criticize the government. Anyway, this is I'm going to put a positive spin on this. Whether or not we get a doomsday scenario and the United States goes completely left, hard left authoritarian after the 2024 election is completely theoretical. Whether it happens or not, the point is, Bitcoin is your life raft. As Christine Lagarde said, Bitcoin is your escape hatch. It doesn't matter if they debank you if we're on a Bitcoin standard, if we're on zero, so to speak. They cannot deplatform you if you're using things like Nostr, decentralized social media. And all of that is getting better day by day, exponentially. Bitcoin Magazine published an article back on May 28th, which illustrates how this is not just a hypothetical. This isn't just something that we need to think about if the United States were to go off the totalitarian deep end. This is already a reality for people all over the world. They published an article, How Bitcoin Can Preserve the Life Savings of Refugees. Bitcoin's unique properties make it the best way to preserve wealth in a time of crisis, but there are some things to keep in mind to prepare. Basically, we've said this before, and Bitcoin Magazine wasn't the first to iterate this. If you remember the Oslo Freedom Forum, they had Zarifa Ghaffari and other people speaking that were refugees. Zarifa was basically a refugee from Afghanistan. She managed to escape the Taliban with basically just her Bitcoin. She talked about refugees basically have everything that they own stolen from them. They might leave with gold or money or even just the clothes on their back. But regardless of what they have, people steal from them all along the way. Taliban checkpoints steal from them. Border guards at the country they're going to steal from them. Other people, other refugees steal from them. That if you're trying to flee, basically most refugees arrive at their new homeland with nothing other than the clothes they're wearing. And that she was able to escape and take her life savings with her because of Bitcoin. She's not the only instance of this. People in countries that are already oppressed, people in countries where they're already trying to flee, refugees from those countries don't need to be told how significant Bitcoin can be for them. They may have already used it, or they might have experienced, having everything stolen, and they would be really easy to orange pill once they find out a bit about Bitcoin, because it's a no-brainer to them how just walking across the border with 12 or 24 words in their head is a lot different than trying to walk across the border with a wad of dollar bills in your back pocket, or a small pouch of gold, or even just a painting or whatever your most valuable possession is. And so Bitcoin is that life raft. Bitcoin is the escape hatch, and Bitcoin is hope. One other highly misunderstood piece of news item that's still floating around out there is this federal district court ruling referenced the SEC's lawsuit against Ripple about XRP last week. The XRP army is touting this as a huge win. This was not an actual formal ruling. It was a formal ruling, but the case wasn't settled. This was what's called a summary judgment, where certain aspects of the lawsuit are ruled at on their face value before the trial. And what those two things that the judge said was that XRP or Ripple, coins and digital assets in and of themselves are not necessarily in and of themselves securities. And if you know what the Howey test is, the four-prong test the Supreme Court set for determining what a security is, this is a no-brainer, right? Anything can be a security if it meets those four prongs, but if it doesn't meet all of them, it isn't a security. So Ripple can be a security, but in how it's used, but not a security inherently. And that's all she said, is that Ripple's not inherently a security. What she did say was that when they issued XRP and they sold it to all these institutional investors, the way that XRP was initially rolled out was absolutely security, and that's where it met the Howey's test. The Howey test. Ripple's going to get smacked. They have been put on notice by this judge that they sold unregistered securities. There are going to be repercussions for this. The ruling, the important part of this ruling is, yeah, digital assets are not inherently securities. Bitcoin is a prime example for that. Just because it's a digital asset doesn't mean it's a security. But if Bitcoin were rolled out in a manner where, let's say, a foundation sold this to people, kept a pre-mine, there were a foundation that was developing the code, doing things to promote the value and the use case for that coin, well, then it's a security. That's what XRP is doing. That's what every shitcoin other than Bitcoin is doing. It's certainly what Ethereum's doing, and that is what the judge said makes those altcoins securities. So if you're in the XRP army, you're jumping up and down celebrating, you're smoking hopium, because all she said was that basically Bitcoin isn't a security, that Ripple doesn't have to be a security, that Bitcoin basically acts, if Ripple acts like Bitcoin, if it had been disseminated fairly and programmatically, it wouldn't have been a security. Now there was a silver lining for people that already own these coins. You know, she did basically give Coinbase a huge potential win, where she said that just the trading of these securities aren't a security. So, you know, if you were buying and selling Ripple, you're not trading in securities. But that doesn't mean that the foundation that's promoting the use and the use case and the value of Ripple isn't going to get smacked down. And that, you know, if Ripple, if like, say, for example, if the Ethereum Foundation were to get smacked down by the SEC and shut down, what's the value of Ethereum if there's no foundation running nodes? Because it isn't decentralized. You know, there are people out there running these mini nodes basically that aren't actually full nodes, that basically do nothing. That Ethereum can't exist, and all these chains, the coins that are built on Ethereum, can't exist without the foundation. So this is dark and ominous for altcoins, not something to be celebrated, even though Coinbase is celebrating, the XRP is army is celebrating, thinking they got a huge win. All right, back to Bitcoin. I have not seen this video clip. I heard a clip of it played on a different podcast, but apparently Kathy Wood was on Bloomberg. You know, Kathy Wood has made multiple predictions about Bitcoin. She has that ARK investment fund that is very tech focused. Previously, she had said that Bitcoin was going to hit 1.5 million by 2030, but apparently she's saying that by 2025, Bitcoin is going to hit as high as 1.5 million. She clarified that this was a range, that basically on her high end, she was saying Bitcoin could hit as high as 1.5 million, and then the low end, she thought it was going to at least hit 600,000. So Kathy Wood is very bullish. Obviously, I expect Bitcoin to go through the roof after the next halving. If it hit 600,000, I'd be absolutely ecstatic. If it hit 1.5 million, even more so. If it hits 100,000, I'll be ecstatic. You know, if it just sets a new all-time high, I'll be ecstatic. It's going to do what it's going to do. If you are a true Bitcoiner, you're in this for the long term. You're planning on holding through obviously more than just the next halving cycle. And, you know, Bitcoin's going to hit that 1.5 million sooner or later eventually. Maybe a little closer to what I believe. And I know this is also controversial because Plan B had his stock to flow model, which a lot of people took as gospel, and they thought Bitcoin was going to hit 150,000 last cycle, and they were trading based on that. And in Plan B's defense, he said repeatedly, hey, this is a model. This isn't a prediction. It's not written in stone. And his model had been demonstrated to be, it appeared that it was correct all the way until it wasn't, right? Well, anyway, yesterday he tweeted a, quote, stock to flow model update. And basically he tweaked his stock to flow model. He said, based on the latest data and halving cycle average, stock to flow ratio, and BTC price, for the current halving cycle model still says 54,000. And for 2016 to 2020 cycle, the model predicted 4.4K when Bitcoin was 5.8. For me, the model error is okay and surely doesn't make the model broken or invalid, but I guess that's a personal decision. I focus on 500,000 plus or minus error for the next cycle. So, you know, Plan B is saying that his prediction is that Bitcoin's going to be anywhere in a range. I think the lower end was 200,000 and the upper end was 500,000. I think his stock to flow model is useful as a model, as a reference to look at, a lot like that econometrics model, that chart that I was talking about earlier. It doesn't mean that's where Bitcoin's going, but it's useful to look at and to see where Bitcoin is. where Bitcoin was and use that to help make an educated guess about where Bitcoin may be in the future. Obviously, none of us have a crystal ball and we can't predict where Bitcoin's going to be. I do recall that Plan B's original stock to flow model was pretty darn accurate. I think he said it was his original model said Bitcoin was going to peak at 55,000 last cycle, and in fact, it went all the way to 69. It wasn't until he revised his model with his cross asset model, where he compared it to other assets like gold and real estate, that he got way out over his skis, as Greg Foss likes to say, and predicted the 150,000. So this model seems to be more in line with his original model, and I guess only time will tell. All right. So this is the first podcast I've recorded from back in my studio in quite a long time. As you know, I've been on the road a lot. When I'm on the road, normally I record on my iPhone, and it actually has, the app, it's a Spotify app, Spotify for Podcasters app. It used to be the Anchor FM app. It does a pretty good job of picking up decent audio off of your phone microphone, and I've been pretty happy with that. And then I also have a little Blue Sherpa podcaster mic set up that I bring with me, but I don't take my full soundboard. It's just a USB mic that you can plug into your laptop. But this is the first time, even since I've been back home, not traveling, the first time in a while I've used my studio because, there've been a lot of things that have just prevented me from getting in the studio in the last couple of weeks. So right now I'm in the studio and I've got my full setup. I'm sitting in my nice chair. I've got my nice microphone in front of me. I'm using my soundboard. So a couple of thoughts. The first thing is when I'm recording my studio, I'm listening through my headphones so I can hear what I'm saying and I can hear what I sound like. And this shouldn't come as a surprise to you, but I tend to speak pretty fast. And when I can hear myself in the headphones, I can modulate myself and maybe try and not speak as fast. This podcast probably wasn't the case because I could hear myself keep speeding up and speaking faster, and I would remind myself to slow down a little bit. But, I'm kind of out of practice. So I have to remind myself repeatedly to stop speaking so fast, stop talking a mile a minute. So when I'm in my studio more often, maybe that'll become more of the norm, and I'll stop speaking as quickly, unless of course you like how I talk, and maybe some of you are listening precisely because I speak fast. A lot of podcasts people listen to on 2 times or 2.5 speed. Maybe you don't have to do that with me because I'm already on 2.5 speed. So we'll see. But more important than that, it'd be interesting to see when I play this back how this sounds, because I am talking on a much more professional microphone, certainly a lot more expensive microphone. I haven't run any noise reduction on this yet. Normally I clean it up a little bit in Adobe Audition later, and that helps improve things. Obviously, if I'm using the Anchor, the Spotify for Podcasters app, it applies whatever noise canceling and cleanup it's going to do on its own. You can't really clean up that audio. When I'm using my Blue Sherpa mic, normally I record with one of several audio programs I have access to, and usually I'll end up putting a denoise on that. The last couple episodes I've had to, there's just been all kinds of distractions, thunderstorms, parrots, occupational hazard when you're in Florida. There's just loud noises from time to time, loud air conditioning units, what have you. So I'll have to see if I need to clean this one up or not. But in general, hopefully this sounds a lot better, because if it doesn't, I wasted my time and money sitting in the studio recording. So, hey, let me know what you think. Does this sound a lot better talking on this expensive microphone, or did you like the previous podcast? Because that was recorded on the Blue Sherpa, or maybe one when I was on the road in Albuquerque, New Mexico, and Los Alamos, New Mexico, when I was recording on my iPhone. So send me some feedback on that. Again, you can DM me at BTC Bulletin Pod on Twitter, at BTC Bulletin Pod, BTC Bulletin POD, or send me an email, bitcoinbulletin@protonmail.com, and let me know what you think. Do you like the pace with which I speak? Do you listen to me on 2.5 times speed anyway? But more importantly, what do you think about the studio that I'm in right now? How is the audio quality right now compared to some of the other episodes I've done? All right, but I'm getting a little off topic here. Once again, the reason we're here is because today is DCA Wednesday. And if you don't know what DCA means, if you've never listened to this podcast before, DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be stack number 104. As I said in the intro, that is 104 Wednesdays, 52 weeks in a year, 52 times 2 is 104. This is 2 years worth of stacks. Although technically our first stack was not quite a year ago because our first DCA Wednesday was July 28th, 2021. But next DCA Wednesday will be won't be till July 26th, but we've stacked 104 times after today, and our first episode ever would be between now and next DCA Wednesday, because our first episode ever was a weekend update episode on the 23rd of July, I believe. So we can't start popping champagne and noisemakers yet because technically we have not been on the air for 2 years, but this marks 2 years worth of Wednesdays. And back to what I was saying, DCA is short for did I already do this? Am I repeating myself? DCA is short for dollar cost averaging, which is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. For example, this will be our 104th stack. We started all the way back on July 28th, 2021. So far, our previous 103 stacks have earned us a total of 7,144,363 Satoshis, currently worth a US dollar value of $2,135.09. We've turned 2,060 US dollars into Bitcoin, including $46.35 worth of fees. So we're in the green. Not only have we made up our fees, we've also increased our net worth a little bit. And that's easy to do when Bitcoin's heading into a bull market. But the nice thing about dollar cost averaging is we started this before the all-time high. We started purchasing when Bitcoin was at around 39,000, and we purchased every Wednesday all the way up to the all-time high of 69,000, and then we purchased all the way back down, and we purchased all the way through the crab period, the sideways accumulation phase. And doing so has gotten us that stack of 7 million sats at an average purchase price of $28,833.92, which is close to what Bitcoin's currently worth, a little bit less. And hopefully, we're going to raise that a little bit today because we're purchasing for a little more. The nice thing is, during this whole bear market and sideways market, we've been decreasing that average cost basis. Last Wednesday, we actually increased it by $70 because we purchased so much more expensive. But I digress. We're going to add to that stack today using the Cash App. I like Cash App because I think it's the easiest way to stack sats. It may or may not be available where you are. If it is, there is a referral note in the referral code in the show notes. If you use that, you'll get some free money just for signing up, and the podcast will as well. So you'll get I think it's $5 free for signing up, and the podcast will get $5 free as well. So you'll be basically tipping the podcast while getting paid to do so. Cash App is not a sponsor of the show. We have no sponsors, particularly not. Cash App is not, but we have a couple of referral codes in the show notes. Anybody that if you do sign up for Cash App, you'll have a referral code to send your friends and family as well. Everybody gets one. If you do your own research, decide Cash App is for you, please consider clicking on that link when you sign up. But all that's really important is that you find an exchange or app that is, well, A, it's available where you are, and B, it suits your needs. Cash App is not necessarily the cheapest way to stack sats. They charge about a 2.25% fee. Everyone charges some sort of fee. There's plenty of apps or services that say they don't charge a fee, but they charge what's called a spread, where they charge you just a little bit more than the fair market value of Bitcoin, and that's a fee, right? What I like about Cash App, though, is they're going to let us purchase this Bitcoin and withdraw it immediately, and they're not going to charge us a mining fee to do so. So that's actually going to make up for the fee, for the 45 cents it's going to cost us to make that purchase today. So I think it works out in the wash. But again, do your own research. You do you. The important thing is that you pick an app that works for you and you get stacking. So I've got the Cash App open already. I already have $20 on the Cash App. Sometimes I do, sometimes I don't. Cash App lets you add money immediately. I have a debit card linked, so it lets me add money instantly. I'm going to tap Bitcoin, tap buy. I'm going to enter $20 this time. Last time it let me tap 20. It changed. It mixes up the amount. I think it's trying to make you mix things up. I encourage you to spend a different amount, but I'm going to manually enter $20. Hit confirm, and boom! Just like that, we've purchased another 65,479 sats, and that is going to bring our total stack up to 7,209,842 sats, and it's going to raise our average cost basis up by about $15.53. So our average purchase price is now $28 $28,849.45. That's really close to what we purchased at. We purchased at 29,000. Well, it's $1,000 less than we purchased at. We purchased at $29,857.05. So we're still in the green. Our stack has a current value of $2,096.25, despite the fact that we've invested $2,080 and $47. That was fees. So we're still looking pretty good, unfortunately, or I guess it really doesn't matter. But as the price of Bitcoin goes up, we're going to stack fewer sats each time, and that's going to increase our average cost basis. But none of this will matter when Bitcoin eventually goes to the moon. If Bitcoin hits 100,000, 200,000, or perhaps a million one day, whether you purchased at 28,000, 30,000, 50,000, or 100,000, won't really matter a whole lot. In fact, if Bitcoin does go to the moon, if $1 million is your version of the moon for Bitcoin, our current stack would be worth $72,098.42. A hell of a return for $2,080. Even if Bitcoin only goes up to $100,000, our stack would be worth $7,209, so almost 4x. So that's pretty cool. All right, I probably rambled on more than I was intending to. It's actually a little hot in the studio right now, so I'm anxious to wrap this up and get into a slightly cooler building. But thank you for listening. Please reach out and let me know what you thought about the podcast. Please give us a follow on Twitter. Again, we're at BTC Bulletin Pod on Twitter, or send me an email at bitcoinbulletin@protonmail.com. Of course, if you appreciate this podcast, you can help support us with that value for value model by listening on your favorite podcasting 2.0 apps such as Fountain or Breeze. And you can also let us know what you think by sending a boost or streaming us some sats if you don't want to send us a message. But either way, all that matters is that you are listening and that you're growing that stack. And hopefully we'll meet up again next Wednesday while we grow that stack together on the next DCA Wednesday episode, where we dollar cost average in another $20 US for the Bitcoin. And we're going to keep that up regardless of what the price of Bitcoin is until either Bitcoin goes to the moon or you get bored and stop listening. Until that time, though, keep on stacking those sats, you sexy sat stackers.